Hey everyone, welcome back to the channel. Today we're talking all things Help to Buy. Now we're going to talk about who it's for, how it works, and most importantly, how much is it actually going to cost you. Want to find out? Let's go. Okay, so this wouldn't be YouTube, would it, if I didn't say please give us a like and subscribe to the channel. We've got more content coming. I'm going to introduce what we're going to talk about later on in the video, so if you don't want to miss that, hit the subscribe button and you won't miss out. First things first then, Help to Buy. Who's it for? So, first time buyers, this one is for you. This is exclusive to first time buyers. Help to Buy changed in 2021, so it used to be available to everyone. In fact, I've got one. Well, I did have. So it used to be available to everyone, but now it is just first-time buyers. And the current scheme runs until March, the end of March 2023. So there's still some time. It's April 21 now at the time of filming this. So there's still a little bit of time to make use of this Help to Buy. We don't know what's coming next yet. I'll do a video on it as soon as we do, but for now, this is how Help to Buy works. So with Help to Buy nowadays, you get a limit on the house price that you can buy. Now that limit depends where you are in the country. So if you're in a more expensive area, the limit is going to be higher than if you're in a less expensive area. Obviously London is going to come with the highest allowance available. So Help to Buy basically works by the government lending you, lending is the key word, we'll talk about that more in a minute, but the government are going to lend you 20% of the purchase price of the property that you're going to buy. Now, it's only available on new build houses as well at the moment. So new build house, up to 20% of its value comes as a loan from the government. Now, you then need to put in 5% of the property price yourself. So add those two together, we've got a 25% deposit on a new build property. If you're in London, that changes a little bit. You can borrow up to 40% of the value of the property because your property prices are going to be that much higher. So let's run through some examples of that then. So let's take a house at £400,000. We're going to be borrowing 20% of that from the government. So that's £80,000. So that Help to Buy loan is going to be £80,000. Then you're going to need a deposit of 5%. Which is another £20,000. So 80 and 20 altogether, we've got £100,000. So we then need a mortgage of 300. So a mortgage of 300,000 for a property price of 400,000. That's a 75% mortgage. That means we're going to get a really good mortgage rate. That's a really good deposit to have. For the mortgage lenders, it doesn't matter that it's Help to Buy. Some lenders have some different products if it's Help to Buy, some don't. But generally speaking, that's a 25% deposit. Or if you're in London, obviously that's a bigger deposit. Although you don't have to borrow the full 40%, you can just stick with 20. If you buy a house that's a little bit cheaper, let's say you buy a house for £300,000, then we still get the same 20% loan from the government. So that is £60,000, and you still need 5% of your own money. So that's 15. So total there then is £75,000. So we've got £75,000 deposit on the property. We need a mortgage of £225,000. Again, 75% of the property's value. So all sounds good so far, doesn't it? We've got a 75% mortgage, 25% deposit, we've got a nice low mortgage rate, and we've got the rest from the government that we don't need to worry about for ages yet. Or do we? Because not many people are aware of this when we speak to them. The trouble is, you go around these lovely new build sites and they talk to you about Help to Buy, and without, any disrespect to any new build sites, but a lot of the time I've heard they don't really talk about the implications of Help to Buy. It sounds like free money. Well, it's absolutely not. So I want to talk to you about what is going to happen to this loan that you're taking from the government. You're borrowing 20% of the property's value now, so 20% of the purchase price. You owe them always 20% of the property's value. Now, if your property goes down in value, you owe them a bit less. You still owe them 20%. But as we've seen at the moment and lately, house prices shooting up. So if your house price goes up in value, so does the amount you owe. So let's go back to those examples. Our house at £400,000, let's say in a few years' time, I won't put a figure on it, 5, 10 years time, who knows, but in a few years time, it's now worth £500,000. Now, 20% of £500,000 is £100,000. You only borrowed 80, so you took 80 from the government, now you've got to pay back 100. So that money has cost you £20,000. So that's quite a lot of cost for borrowing that money. If we look at the other example we did, the £300,000 house, let's say now that's worth 400,000. Well, that loan of 60 that you borrowed is now 80. So we need to repay £80,000. Again, £20,000 increase. That's not the only cost as well. We need to pay some interest. Now, we don't need to pay any interest at all for the first 5 years. So that's really, really good. It's interest free for 5 years. But then in year 6, the interest kicks in, and it kicks in at 1.75% at the moment. And then it goes up each and every year by the retail price index plus 1%. And no one knows what that really means, but it goes up a little bit each year. Not much, but a little bit each year. So your interest payment in year 6, let's say that house you bought for £400,000, and we took the Help to Buy loan for £80,000. In year 6, that is going to cost you £116 per month and some pence, but £116 per month in interest. Now that is just interest. You are not repaying the loan at all. You are just paying the interest each month. In the other example, the house for 300, we borrowed 60 on Help to Buy. That is going to cost you £87.50 per month. So that's another cost that we need to factor in when you're taking a Help to Buy loan. Now, I don't want all this to sound all doom and gloom. It's not. Help to Buy is a great scheme to get first-time buyers on the property market. I took one myself. I'm going to talk about how we paid it off in a minute. But I took a Help to Buy loan. I've got one, so I'm speaking from experience. This is exactly what we did. We took it when you didn't have to be a first-time buyer, because we weren't first-time buyers. So it's a little bit different now. But yeah, we've got a Help to Buy loan. So they're not all bad. I'm not trying to say they're bad. But you very rarely hear anyone really talk about the true cost of paying it off. So these are all things that you need to be aware of when you're looking at taking a Help to Buy loan. There's a few other things that we need to take into account as well. So we're going to go to a high street lender probably. We're going to want to borrow a mortgage for the rest of the property's value. Now, not all lenders do Help to Buy. Most do. Most of your high street lenders are going to give you a mortgage when it's Help to Buy, but not every single one. So you need to check with that lender that you go to first if they actually do Help to Buy. Now that lender is going to do an affordability assessment. They're going to factor in though that loan, that interest that you're going to pay after 5 years. So sometimes, depending on your income and the lender, some are more generous than others. We've talked about that on other videos, but they're going to take that interest payment per month into account. Even though you don't pay for 5 years, they need to assess it based on the future. So they need to know that when you start paying interest, you're still going to be able to afford the mortgage. So that means you can't always borrow quite as much on Help to Buy as you could if it was just a normal open market purchase and not a new build with Help to Buy. Now, I said the lender is going to do an affordability check. Help to Buy will also check your affordability. So they're going to look at your income and your outgoings and things. Now with Help to Buy, it's just a form to fill in. They don't need, it's not like a mortgage application where we need to send them pay slips and bank statements and all those other things. It's just a form to fill in. We tell Help to Buy what the situation is, and that is sufficient for them. They also do not do a credit score. So Help to Buy is available if you have not quite perfect credit score, and there are some lenders as well. If you haven't quite got perfect credit score, you can go to and you can do Help to Buy. That's fine. So there's no credit scoring with Help to Buy. So that means that Help to Buy is quite an attractive proposition for a lot of people. You know, buying a house with 5% deposit, even though it has to be new, you know, that's okay. Not everyone wants to buy a new build, but those that do, that's cool. So 5% deposit, if you look on the open market with your 5% deposit, you're going to pay a higher interest rate on your mortgage. It's going to cost you more each month. But you're only repaying your mortgage. With Help to Buy, you've got to pay off this other loan as well. So we just talked about that. I'm not going to dwell on it anymore particularly, other than to say that that loan from the government is not interest-free forever. You start paying interest on it after year 5, and it goes up as your house price goes up, or down, but more likely up normally. So If you are okay with that, then Help to Buy could well be for you. But you just have to remember that it can get quite expensive. The key with Help to Buy is to pay it off as soon as you possibly can. So if you can pay it off before the interest kicks in or after 2 years, 4 years, the sooner you can pay it off, the better. Now, we'll talk about the different ways we can pay it off in more detail on another video. But for now, let's just say you can pay it off with cash. The more common option is a little bit of cash, maybe a little bit of savings, but it's to remortgage to pay off Help to Buy. So let's use that same example, that house at 400 that's now worth 500. We need to pay off an extra £100,000. So your mortgage started at 300,000. So let's say 5 years later, your mortgage will have come down a little bit. I haven't worked out how much it will have come down a little bit, 280 maybe, something like that. So you're gonna remortgage. We're going to add on £100,000 to your mortgage if there's no cash available, and that is going to pay off Help to Buy. So we're going to be left with a mortgage of around 380 to 400,000, depending on how much you've managed to pay off and how long it's taken. So let's say we've got a new mortgage of 400. House though, as we've just said, has gone up in value. It's now 500,000. So we've still got a load of equity there. We've paid off our Help to Buy. Yeah, it's cost us £20,000, not ideal, but now we've got one mortgage on the house and you just pay it off over time. That is the secret of how to make Help to Buy work for you, to pay it off as soon as you can. There's a few different ways of doing that, so we'll talk about that more another day. So for now, let's just remember the key points. The interest kicks in after 5 years and the amount you owe goes up in line with your house value. You always owe 20%. Now, if you want to know if Help to Buy is suitable for you, you can talk to any mortgage broker. Obviously, we would love you to come and talk to us. If you want to know more about how to repay your Help to Buy, I'm going to do some more videos about that in due time. So be sure to subscribe to the channel and then you won't miss that. But for now, if you want to talk to us, you can. There's a link in the description below. There's also a link to our website, so go and check it out. You can book an appointment with us directly on there. That's it from me. I'll see you on the next video. Take care.